On YouTube, welcome back to another video with the House Money Investing channel. In tonight's video, we're going to go over about 19 trades I just made into the market, along with about 3 different deposits I made. So jumping right into it, we bought a fractional share of HTA. This is a healthcare trust of America, and I got about 61% of a share. This is a nice dividend paying stock, over 4% dividend. Something that's kind of been beaten down since the pandemic, so it's also got some little growth to it. Great EPS and analyst ratings, and this is a real estate company. They basically invest in office buildings, so this is going to be a nice little swing trade here for a bounce back play with a great dividend payout. Then we have Psth. This is something I've swing traded heavy all this month, and this is a blank check company. Merging into the EV space, and I actually got 2 trades for this one for the 2nd and 3rd of January, and this is an investment trust company out of New York. So this is going to be a nice little swing trade here as well, and it's been pretty much running up since it IPO'd. It's up about 27% over the year. Then we got another EV play, which is NIU. This is Technology Holdings Company, up 229% on the year. EPS is decent. It's a Chinese EV company, and they make lithium-ion batteries, as well as they do like personal scooters. So for a place like China or New York, somewhere where it's really packed, these scooters are kind of a big deal. And being electric powered with these battery technology that they have, it's going to be some nice growth as well. And that was a fractional share, 67% of a share at $19. Psth was a fractional share, $18, so it's 64% of a share. And then we got HMC. This is Honda. Honda's doing pretty well for itself. They make a lot of good money on their automobiles because they're known for reliability. They're not really known for all the little extra amenities and such. So basically that allows them to overall get a nice profit. It's up about 15% over the past 3 months. It's been running up. It did dip during the pandemic, of course, and of course, great buy ratings of 88%. Great expected EPS Q2 of 2020. This is an automotive company out of Japan. They make a variety of products like cars, motorcycles, all-terrain vehicles, other power units such as like leaf blowers. They just got an array of products. So definitely going to be a nice swing trade there. A fractional share, $20, about 70% of a share there. Then we got Li Auto. This is something I've been swing trading heavy. This is also a Chinese EV company. Still up there 87% on the year, but it's dropped almost 100% since its highs, so it's got a lot of potential to run up. And Li Auto is something I've also swing traded a few times already this month. Great analyst buy ratings, and they basically make electric SUVs. And that was a fractional share, $21, so that's 72% of a share. Then we got Main Capital, ticker MAN. It's also another REIT. It's been beaten down since the pandemic. It's came up a little bit and kind of consolidated. Still got room to grow. Great dividend payout of 7.63%. EPS has been on the downward trend. Hopefully Q4 will be a little bit better. It's an investment company out of Texas, and they do like debt and equity financing solutions to like lower and middle class market companies. They do like buyouts, recapitalizations, growth financing, and they acquire companies that have annual revenues of anywhere from $10 million to $150 million. So it's going to be a nice swing trade. Main Capital is something I'm already into long term, and something I'm going to continue to swing trade to build my positions. That was a fractional share, $22, 67% of a share. Then we have GUNR. This is a fund, index fund from Flex Shares, Morningstar Global Upstream Natural Resources. So basically, this thing's also been beaten down. It's been running back up. Does pay a dividend of $2.79, and this is going to be Morningstar's Global Natural Resource Index Fund. So basically, Morningstar, if you don't know, they're like a big hedge fund. That, you know, they give their opinion as in thesis on a lot of companies. So the best natural resource companies are going to be located here in this index. So it's going to give you plenty of diversification, you know, into that sector of the market, along with the, you know, pretty much low volatility and a nice payout of, you know, 2-3%. This is a fractional share of $23, about 70% of a share. Then next up, we got LASR. It's also going to be a nice little swing trade for me. Company is Enlight. It's up 64% on the year. This is a fractional share of $24, about 73% of a share. Great analyst ratings on this company. EPS has been great since Q4 2019. This is a company out of Washington. Does like electrical components. It's in the industrial sector. Basically, they do semiconductors and like laser components, optical fibers, things of that nature. And the semiconductor market is super hot right now, so definitely something I'm looking forward to swing trading. Then we bought SPY-D. Love SPY funds or spider funds. This is a high dividend fund, so it's not gonna have very much volatility. It did drop massively, about 45% during the pandemic. It's been slowly but surely consolidating back up to, you know, toward the all-time highs. This thing here is going to pay a nice dividend, about 4 to 5%. We got a fractional share at $25, or 0.75 of a share. And this is something, you know, this is something I already own, by the way. I swing traded it back in November and left my gains in it around in the December. And this tracks basically the 80 highest yielding stocks selected from the S&P 500. So again, great diversification, low volatility, along with a nice dividend payout. Next up, we got EMLC. This is going to be a fractional share buy as well. This is a currency bond from VanEck. So this is going to be somewhere just to store your money, against hedge against the market. Very super low volatility. It's not going to fluctuate much. It's going to give you a nice payment of 4 or 5% interest on your money. So it's just a nice savings, basically like a nice savings account with very low risk, way better than a bank. It was down about 20% in the pandemic, so it is running back up. It's kind of, you know, stagnant, but at the same time kind of going up. So definitely love putting my money in bonds, just somewhere to store some of my cash. Next up, and that, I'm sorry about that, it's a fractional share as well, $26, 78% of a share. Next up, we got BAB. This is a power shares bond. I love power share funds as well. This one isn't going to fluctuate much either. It was down about 21% during the pandemic. Same as the others, kind of consolidated, kind of ran back up a little bit as well. This one will pay a nice dividend yield of 2.96%. So once again, just a safe place to store your money and collect that nice dividend payment. This is a fractional share of $27, 80% of a share. Next up, we got another spider fund. This is SPY-V. This is the most, this is the companies based out of the S&P 500. So it's going to be the top companies out of the S&P 500 with large to mid-cap value. So it's going to be some of the best companies you can find. I did swing trade this back in November, locked in my profits in December. This one also pays a nice dividend of 2.38%, so you'll get about 2 to 3% interest. It was also down about 36% during the pandemic, slowly running back up. So you're going to get a nice steady little growth, as well as a nice dividend payout. as the S&P 500 is the top 500 companies in the world, and you're going to get the the most valuable ones. This is also a fractional share. $28 is 81% of a share. Next up, we got PASS. This is a play into precious metals. Some I'm also swing trading pretty heavily this month. This thing was down about 44% during the pandemic. It's pretty much has recovered. As silver and gold and other precious metals like platinum, copper have been doing very well. It will pay you a small dividend, 0.64%. Of course, the analyst ratings are high. Of course, the EPS has been doing good. This is a material company out of Canada. They explore and develop and extract, process. They do refining, reclaiming of mineral properties. It owns mines out in Peru, Mexico, Argentina, and Bolivia. It does silver, gold, and other precious metals. So this just be a nice little exposure to precious metals. And as that sector runs up, as inflation goes up, this is going to rise in value as well. And this is just another hedge against the fiat dollar. So this is a fractional share of $29. It's about 83% of a share. Then we got GDX. This is a gold miners ETF, one of my favorite gold miner ETFs. It was down about 30% during the pandemic as well. Still has about another 10% run up in it. Decent dividend of 0.53%. It's just something small. And this is basically an ETF that's by Van Heck. It's gonna contain the best gold miner stocks, all kind of in one. So, pretty safe place to put your money as well, with the exposure to those precious metals. Then, as you can see here, I made a $14 deposit into the Robinhood account. It's just adding funds to give me more money to swing trade for the rest of the month. Then we got a Jpse. This is a small cap equity fund by JP Morgan. JP Morgan has some of the best ETFs as well. It's a great bank, and this is pretty diversified through the small cap. So it's basically going to be, an index comprised of U.S. small cap companies, and that's going to be based on fundamentals and technical factors for stock selection and inverse volatility rate. This thing here was also beat down during the pandemic, about 40%. Still about 30% growth left in this one. It's not going to fluctuate very much. It's going to give you nice diversification, nice exposure, and the dividend yield is about 1 to 2% in this company as well. So another safe, nice pay and play. This is a fractional share, $31, 86% of a share. Then we deposit another $171 into the Robinhood account, just to give me more capital to swing trade with as well. Then here in Ameritrade, you have to buy per share here, so everything here will be one share. This is Concierge Gaming. This is a recent IPO. It IPO back in September. It ran up about 200%. It's still up 115%. It's kind of sold off and consolidated a little bit. I think we can go back up and retest those highs and that resistance. So it's going to have a little bit of a nice growth still left in it. Great EPS is a hardware electronic components company out of California, and basically what they make is like they design and supply hardware components, things of that nature. So definitely going to be a nice swing trade. Then in the Ameritrade account, we went ahead and deposited $131. Again, just upping my capital and my brokerages to be able to continue to make these swing trades. Then here in the Moomoo account, this also doesn't do fractional shares, so these will all be one share. I went ahead and purchased one share of EWZ. This is a Brazilian fund. It was beat about 55% down during the pandemic. Still has about 33% upside. This is going to give you exposure to another market outside of the United States. So I always like to diversify and get exposure to other sectors as well as countries like Japan, China, Brazil, of course, Canada, Africa. It's all kinds of different countries that have actually have some decent stocks. If you don't know about like Neos and the Alibabas, sometimes it's kind of hard to find those good companies out there. So what I do is like to do ETFs, which is, you know, a safer play with nice diversification. And this is an iShares fund. iShares has some great funds. It's going to pay just about a 2% dividend yield, and it's going to be basically the best Brazilian firms all bundled in, you know, to one fund. So a nice, safe, diversified play there with a nice payout. Then in Moomoo, we bought one share of Groupon, ticker GRPM. Groupon has been beaten down this year massively. It was down about 60-70% because, of course, nobody's using Groupon, right? Nobody's traveling, nobody's using these coupons and things of that sort. This will be a bounce back play as the vaccines are coming out. People will start to travel again. They're definitely gonna, they're definitely gonna be using these coupons and things like that. The CEO has a background as well in marketing at Amazon. Of course, everybody knows Amazon's pretty much monopolized that space. They're taking over. So definitely a nice play for Groupon. The last 2 quarters, their EPS has been going back up. They're considered a software company. It's out of Illinois. Give you exposure to consumer services and retail. And basically, it's a 2-scale sided marketplace that connects consumers with merchants by selling vouchers through online marketplaces. So also little e-commerce exposures. And it operates in North America and internationally. So it's going to be a nice swing trade here for Groupon. Then in Moomoo, we bought a Fidelity Fund here. Fidelity National Financial. Of course, it was beaten down during the pandemic, of course. Down 52%. Still has about a 40% upside here. Nice dividend payout of 3 to 4%. It's going to be a monthly payout stock. Nice analyst ratings. Great EPS. And this is an insurance company out of Florida. And they do insurance for like real estate and mortgage industrial sectors and stuff like that. They do escrow and other title related services. They got trust services, trustee guarantees, home warranty products. They got technology and transaction services to the real estate and mortgage industry. And they operate through a couple different sectors. They have underwriters and that type of related business stuff, as well as real estate brokers. And this is it's a pretty old company that started back in 1847. And over the course of time, they are profitable. So definitely going to be a nice swing trade there. That'll be it for the 19 swing trades I got into tonight. If you like the video, hit the thumbs up for me. Subscribe, hit the bell, follow the journey. I'm going to constantly update you guys with what I sell and buy, which is 7 days a week. As well as, all my deposits, all my withdrawals, all my gains, everything of that sort. All my stock picks, stock news. So, yeah. I'll see you guys in the next